Happy Monday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Asia, Europe, and North America. My name is Tony. It is a big episode today. We have a big week ahead of us, so let's jump in. Global markets are in freefall following two bruising sessions on Wall Street that raised over $5.4 trillion in market value in the US alone. On Sunday evening, US stock futures plummeted, with Dow futures down 1,250 points, 3.3%, S&P 500 futures off 6%, and Nasdaq futures tumbling 5.8%, now down 22% from December. The S&P 500 now hovers on the brink of a bear market, a 20% drop from its recent peak, raising alarms over a potential economic recession. This video goes live just before the US market is set to open on Monday morning. It's been even worse for Asian markets, however. When markets opened on Monday morning local time, Japan's Nikkei opened down almost 9%. Japanese Prime Minister Ishiba said he would visit the US to meet US President Donald Trump as soon as possible, but that in the meantime the country, quote, must ready a package of measures on what Japan can do. End quote. After a 3-day weekend, which meant there was no trading on Friday, China's market opened to a bloodbath. Hong Kong's Hang Seng plunged nearly 11% at opening. The Hang Seng Technology Index dropped over 14%, with major technology stocks like Sunny Optical, BYD Electronic, and Lenovo down more than 16% each. The mainland's China CSI 300 dropped over 5%. We explore this in more detail on today's episode of my other channel, China Update, which goes live an hour after this video. In South Korea, the Kospi index fell over 5%, triggering a pause in trading. Taiwan's TAIEX index plummeted 9.6%, reaching a 13-month low. Australia's ASX 200 declined 3.7%, entering correction territory with an 11% drop since February. Singapore's stock market plunged 8%. Indian stocks followed suit, with the Nifty 50 index opening down 4%. As of recording, Asian trading is still ongoing. According to a UBS investment bank research note published today, Monday, this new tariff war could subtract as much as 1 percentage points from global growth in 2025, with Asian economies hardest hit, once again suggesting that the US has more leverage in negotiations. Oil prices fell below $60 a barrel for the first time since April 2021, amid fears of a tariff-fueled global slowdown. Even Bitcoin wasn't spared, dropping 5.6% to just under $80,000. The panic stems largely from President Donald Trump's global trade reset. A universal tariff was enacted on Saturday, and looming reciprocal tariffs, much higher, are set to take effect on Wednesday of this week. The sweeping levies have rattled investors, with analysts warning that they could tip both the US and global economies into recession. China's sharp retaliation, a 34% tariff on all US goods, has intensified concerns of a prolonged trade war. Despite growing backlash, Trump remains confident. Quote, "Our country has gotten a lot stronger," end quote, he told reporters on Air Force One, declining to speculate on market direction. White House officials also doubled down on Sunday. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick defended the tariffs as a necessary reset of global trade, with Lutnick insisting, quote, "The tariffs are coming, of course they are," end quote. Investors, unsurprisingly, are uneasy. In a new report, JP Morgan predicts that tariffs will cost Americans $660 billion annually and add 2% to inflation. The Tax Foundation estimates the average household will pay $2,100 more per year as import taxes surge from 2.5% to 19%, the highest since 1933. Federal Reserve Chair Jerome Powell acknowledged the tariffs could stoke inflation and dampen growth, but said the Fed is monitoring the situation. Despite the market chaos, some analysts see buying opportunities. Quote, "We are getting close to a bottom," end quote, said James Demert of Main Street Research, adding, quote, "The fear-based selling could soon give way to a sharp rebound," end quote. Still, the path ahead looks rocky. A new Bloomberg survey of 54 economists conducted between the 2nd of April through to the 3rd found that 76% believe the tariffs add confusion to business planning, while 92% say they increase the risk of a US recession within the next year. Economists also foresee higher inflation and growing uncertainty, aligning with Wall Street's recent downgrades of US growth forecasts. Some firms now see a recession as their baseline scenario, citing inflation potentially returning to pandemic-era levels. The chief economist at Nationwide, for example, expressed, quote, "There is still substantial uncertainty of what the eventual import tariff rates will be," end quote. Despite the turmoil, 58% of economists in this Bloomberg report believe the tariffs may push countries to negotiate with the United States, potentially reducing or eliminating the levies. It's going to be a very eventful week this week. There is a lot to cover. There will be a lot that happens, and we will be following all of these developments here on Market Update. So if you want to be up to date with everything that is going on this week, make sure you're subscribed to Market Update. Next up, as sweeping US tariffs loom large over Southeast Asia, finance ministers and central bank governors from the Association of Southeast Asian Nations, ASEAN, have convened in Kuala Lumpur, the capital of Malaysia, for a 4-day summit starting today, Monday. The top item on the agenda, forging a coordinated regional response to escalating economic pressure from Washington. Leading the charge is Malaysia, which country holds the rotating ASEAN chair. Prime Minister Anwar Ibrahim announced the creation of a Geo-Economic Command Center and pledged a calm but resolute approach, expressing, quote, "Malaysia will lead efforts to present a united regional front, maintain open and resilient supply chains, and ensure ASEAN's voice is heard clearly and firmly on the international stage." End quote. The tariffs, which go into effect this week on Wednesday, have disproportionately impacted Southeast Asian nations. Vietnam faces the harshest blow with a 46% tariff, while Cambodia and Malaysia were hit with 49% and 24% respectively. These levies come despite efforts by some Southeast Asian nations to deepen ties with the United States and reduce their own tariffs on American goods. Vietnam's leader, To Lam, has taken the extraordinary step of appealing directly to US President Donald Trump, requesting a 45-day delay and promising zero tariffs on US imports in return. He also requested a meeting in Washington to reach a mutual agreement. Vietnam, now a linchpin in the US supply chain for major brands like Nike and Lululemon, stands to lose over 5% of its GDP if the tariffs go ahead. Indonesia, facing a 32% tariff, and, as regular viewers already know, was already facing a shaky economic outlook, has pledged to simplify trade rules and sent a delegation to the United States for urgent negotiations. President Subianto has already discussed a joint Southeast Asian strategy with Anwar of Malaysia. The country's top exports, textiles, electronics, and palm oil, are directly in the tariff crosshairs. Thailand, which faces a 36% tariff, is likewise preparing to adjust its trade balance. Prime Minister Shinawatra stated that her government will support exporters while also seeking new markets. Officials are exploring increased imports of US products like corn and solar cells to offset trade imbalances. Despite differing economic structures and levels of exposure, Association of Southeast Asian Nation leaders are united in their concerns. The sweeping trade measures threaten to derail investment flows, damage export-led industries, and sow instability in a region that has carefully cultivated ties with the West. As US-China tensions continue to shape global trade patterns, Southeast Asia is finding itself increasingly squeezed between two giants. And for now, the region is simply bracing for impact. And another region bracing for impact, of course, is Europe. The European Union is preparing to respond to the sweeping tariffs, aiming to show a united front as trade tensions escalate. The US president's tariffs, 25% on steel, aluminium and cars, and 20% on nearly all other EU goods, impact around 70% of the bloc's $585 billion exports to the United States. In response, the European Commission will propose a list of counter-tariffs on up to $28 billion worth of US goods, including meat, cereals, wine, chewing gum, and even dental floss. A controversial 50% tariff on bourbon has drawn particular ire from the US president, who has threatened a 200% countermeasure on EU alcoholic beverages. The European Union joins Canada and China in retaliating, raising fears of a global trade war that could disrupt markets and drive up costs for consumers worldwide. Yet internal divisions persist. Italy and Spain are calling for restraint, with economy ministers from both countries urging negotiations over confrontation. Italian Prime Minister Meloni has labelled the tariffs, quote, wrong, end quote, but emphasised diplomacy over retaliation. Meanwhile, France and Germany advocate a firmer stance. Germany's economic minister has pushed for alliances with global partners to pressure the United States, while French President Emmanuel Macron is urging US businesses to halt US investments until clarity is restored. As EU trade ministers gather in Luxembourg, the bloc faces a delicate balancing act: respond firmly to US pressure while avoiding a spiral into devastating economic warfare. Okay, that is today's episode of Market Update. Thank you so much, everybody, for watching. If you got some value from today's episode, don't forget to hit the like button. Make sure you're subscribed so you're on top of all the big news that will be coming out this week. Have a good Monday, have a productive week, and I will see you all for a new episode tomorrow.